Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, October 23rd. Another down day yesterday, but we rallied back towards the end of the day on a basic short covering round. Just want to run through this 5-minute chart of the spiders. As you can see here, chopping around. Really no edge. If you found something that was selling off, and you could stick with it, because that stocks that were moving lower were even brought back up by these little snapback rallies that we had. So a little bit difficult yesterday. A lot of chop during the course of the day, and then we just sold off on a slow grind right after lunch. We tried to retest the low, made a higher low off of this, and then of course snapped back into the end of the day. Final numbers: S&P basically flat, Dow up 2 when we were down. I think at I believe, if I recall, it was about 100 points, 105 points, somewhere in those lines, and gold was up $4 yesterday. So what does this tell us? Well, it tells us that we're still very weak, and right now, as we speak, in the overnight session, markets are getting clobbered overnight, early this morning, if you will. We're down 14 3/4 handles in the minis right now. So whatever was bid back up at the end of the day has sold off, and we just touched a new low in the minis, 14.11. So that's not what we want to see, right? If it was a one-hit wonder, so to speak, on Friday. So market looks like it's correcting. It is what we call turnaround Tuesday, and we'll see if this market gets a bid later on today. But it looks like to me that the markets are in a full correction, which is fine. We can't just have the markets continue to go up. I only have a few charts today. I want to be really specific today for the trading day, for Tuesday. And this is what happened in the S&P. If we look at the indicators, see how momentum indicators are ugly. Our MACDs are widening, starting to curl back down again. We're back below the zero on the histograms. And as you can see on our 14.3 RSI, have rolled back over, breaking below 50. Now, we were grossly oversold in the real short-term 30-minute, 60-minute charts. But the last night that we bounced, kind of unwinded a little bit of those charts. Now, this morning, we're going to gap open pretty hard. Let's see if that's going to be the gap of the morning. You have to use caution here, guys. When we gap lower, we're going to probably open 14, right around 14, probably about 14.15. Well, we're at these are the SPY, the S&P cash. So we're 15 handles down. So yeah, we're going to open up right around this area, which would put us right into the 50-day moving average of the S&P cash. Now, the spiders are a little different. I'll get into that in a moment. But I want to show you how we actually broke this trend line. So this is what I'm watching in the coming days to see if we actually are going to correct, or if this market is going to try to retest, take back these gains and go higher. Now, we've made lower highs from here, here, and here. And now we put in this long-legged doji. And we're right at support here. So this is going to be a pretty key pivotal area for the cash. I'm going to see what happens. I'd like to see us take back at least 50% and then start to roll. Or, like I mentioned yesterday, give it one of these type patterns. Big chop, another flag, back into this area to make that lower high off of here, and then, of course, another sell-off. And then we rally down here. It looks like to me if we don't get this today, maybe tomorrow, and we break this 50, 1372 is really going to be the all-time target. And if you could see here, and if I do a horizontal line here, you'll see the distribution and the supply and demand in this area here. So this is going to be where my target is if we do break this. It's going to be about 1375 for the small correction that we are going to have. And then, of course, we would reevaluate, because if the selling really picks up in this real heavy volume, this is something that's going to concern me. I'm saying, wait a minute, is it just a correction, or is the market actually changing trends? And that's what we're going to watch. Even if you're day trading, you really need to know what the overall trend is. Okay, so let me move back into the spiders first. And what we have here is really the same thing, but I want to show you the volume, how volume has picked up. So you're marking really distribution days. We are in this sort of sideways consolidation. We try to get up, and when the market sells off again, we're sitting right on the 50-day moving average. Now, again, look at these volume bars back here, these volume profiles. As you can see, if I take this area here, we're going to probably start. This will be the back end of the correction of this target, or you can run it right up to this other pivotal area here. So 140, 138, 140 is going to be a good spot actually to say that we're going to have our little support right here underneath this pivotal low here, and then we want to bring this right back down to here. So 138, 140, 138, and then ultimately 136, and we obviously don't want to lose that 200-day because our fund managers are watching that 200-day closely. We're a little bit away from it right now, so right now buying the dip mentality for these fund managers are exactly what's happening. All right, last chart I want to show you is Apple, and Apple here. A lot of I'm getting a lot of obviously emails. What's going on with Apple? What do you think? Real good sign yesterday, right? We took this big, large engulfing. Now this area here matched, right? So we actually hit our first target, and we took it back with an engulfing green candle back. Now today is going to be important as well because we want to see if this really does have some legs, or if this market does actually fail at this long-term trend line, this upper trend line, and starts to roll back over again. If that's the case, then I would be looking to get short here, right? And the reason why is because we have a trend line resistance that we can really manage risk properly by saying, okay, if I'm short, let's say 638 for argument's sake, 640, I know my stop's going to be, 3 points, 4 points back up below this, right underneath this area here, 644, depending on the size of your trading account. All right, guys, but let's really be careful today, especially we're down 15 handles now, so we're going to gap open pretty hard, and we're going to see usually sometimes when they gap open, they try to push them a little lower, but this is going to be a pretty decent-sized gap. I wouldn't be surprised if we push a little lower, marks the low of the day, and then the market trades sideways to slightly up for the rest of the day, and that'll be that so-called turnaround Tuesday that we get. But market looks like to me the next couple of days will be a really good sign to see that we are going to be headed for, we are in this correction, and that we might be headed a little bit lower. But I wouldn't fall in love with the downside. I wouldn't say that we're going to be really crashing lower. I don't think that's going to be the case. But as of right now, it just looks like a mild pullback. We'll see what happens if this pullback continues after today. But next couple days will give us a sign that, yes, the top is in place and we are in this pullback. All right? Have a great day, everybody. Be safe out there. We'll talk tomorrow. Take care.